If you want to grow your money easily and in the fastest practical way, then investing is definitely a smart move. However, when those investments start to make money, you often have to pay taxes on the profit. The downside? The more tax you pay, the less you end up keeping for yourself. But here's a neat trick. If you plan your investments cleverly, you can actually cut down on how much tax you have to pay, and there are some investments out there that don't attract any taxes at all. So when you're laying out your investment strategy, it's pretty wise to think about throwing in some of these tax-efficient options. I'm Will, and I teach people about investing, personal finance, and money. I've walked the path you seek, and today I have several businesses and investments that provide me income every single month, meaning I never have to work another day in my life. If you plan on becoming financially free, be sure to subscribe to the channel and hit the like button if you find this video valuable. So here are 5 tax-free investments to help you keep more of your money. Number 1. Municipal bonds. All right, think of municipal bonds, or muni bonds as they're often called, like this. They're like loans you give to local governments. These governments use your money for things like fixing roads or building new schools. Now, when you invest in a muni bond, what you're doing is lending cash to the government. In return, they promise to pay you back with interest over time. And here's the best part. The interest you get from these bonds, it's free from federal taxes. Sometimes you might not even have to pay state or local taxes on the interest you earn, depending on where you live. But just a heads up, muni bonds aren't perfect. Things like inflation can mess with the interest rates, which affects what you earn back. However, the risk of the government not paying you back is really low. So if you're looking to add something steady and tax-free to your mix of investments, especially a fixed income, then municipal bonds are definitely worth considering. They're a smart way to earn money without giving a chunk of it away in taxes. Moving on to the second tax-free investment option we have. Number 2. Health Savings Account, HSA. HSAs are a fantastic tool for those who want to be smart about taxes while saving for healthcare costs. With a HSA, you can invest and see your money grow tax-free as long as you use it for qualified medical expenses. It works like this. You put your money into your HSA before taxes, which can help lower your tax bill. Plus, any interest it earns is tax-deferred. The money in your HSA isn't the use-it-or-lose-it type. It sticks around and grows over time. And there's no expiry date. Now, when you use your HSA money for eligible health costs, you won't pay any taxes on that. It's a neat way to handle future medical expenses. Also, if you've got a family, you can either open additional HSAs for them or go for a family HSA plan. One of the coolest things about HSAs is their flexibility. Let's say you don't use all the money in your HSA. No worries. You can roll it over into your retirement and use it for health expenses when you're older. This can be super helpful, especially when combined with Medicare, which is the health insurance program for people aged 65 and older. So investing in an HSA is not just a tax-savvy move, it's also a solid plan for your future health needs. Moving forward, the third option is number 3, 1031 exchange. Now, 1031 exchanges are a bit unique. They're all about swapping one investment for another without having to pay taxes on the capital gains right away. This is super popular in real estate, but can also be used for things like valuable art and gold coins. Imagine you've got a property and you decide to trade it for another one. Instead of paying tax on any profit you made from the first property, you can reinvest those gains into the new property. The cool thing is there's no limit to how many times you can do this. But keep in mind there are some rules. Not all investments qualify for a 1031 exchange. Plus, if there's a price difference between the two investments, you might owe some tax on that. And here's an important tip. Because 1031 exchanges can get complicated, it's really smart to talk to a qualified accountant before you jump in. They can help you navigate the ins and outs, making sure you get the most out of it. So if you're into real estate and want to keep growing your investment without a tax hit each time you make a move, the 1031 exchange could be a great strategy to explore. Just make sure you've got all the facts and professional guidance you need to make it work for you. In his book, Tax-Free Wealth, Tom Wheelwright talks extensively about 1031 exchanges and how to use them effectively. You can check it out by clicking the link in the description box below. All right, moving on to the fourth way to keep more of your money with tax-free investments. Number 4, tax-exempt mutual funds. You can think of a mutual fund like a big basket of different investments. It could be stocks, bonds, or a mix of both. Some of these funds just follow a market index, while others are managed by professionals who pick and choose the investments. The cool thing about mutual funds is that they let you invest without having to manage each investment yourself. Some mutual funds are tax-exempt. That means the money you make from these funds aren't taxed. How do they do it? Well, these funds usually hold municipal bonds and other government securities. So not only do you get the benefit of not paying taxes on your returns, but you also get a simple way to diversify your investments across various types of government bonds. But before you dive in, it's important to think about a couple of things. First, what kind of return can you expect from a tax-exempt mutual fund? And second, take a look at the expense ratio. That's the fee for managing the fund. You want to make sure this fee isn't eating up too much of your potential earnings. In short, if you're looking for a hands-off approach to investing with the bonus of not paying taxes on your returns, tax-exempt mutual funds might be just what you're looking for. But remember, do your homework first to make sure it's the right fit for your financial goals. Number 5, Indexed Universal Life, IUL. When you think of life insurance, you might not immediately think of it as investing. But the truth is, certain life insurance policies can actually be a smart part of your investment strategy, especially when it comes to tax benefits. With most life insurance, the money that goes to the people you leave behind, the beneficiaries, is tax-free. But if you choose a type of permanent life insurance like Indexed Universal Life, IUL, there's a feature where you can build up cash value over time. This cash value can earn interest, and the best part? That interest grows without getting taxed. Another cool thing about IUL policies is their flexibility. Unlike retirement accounts where you often have to wait until a certain age to take money out, IUL policies let you borrow against the cash value tax-free at any age, without penalties. Plus, you still get the main benefit of life insurance, the death benefit for your loved ones. Now, it's worth mentioning that IUL can be pricier compared to other life insurance options, like term or whole life insurance. However, if you're looking for a way to earn tax-free money with minimal risk, an IUL policy could be a solid choice. It's a unique blend of life insurance and investment benefits all wrapped up in one package. Are you currently using one of these tax-free investments? Let me know in the comment section below. And if you're interested in building out some passive income streams to make money in your sleep, check out this video next.